On today's hot sheet, I'm discussing Zillow's housing market report for February, the NAHB Homebuilder Survey, and housing start data just released this morning. Today is Tuesday, March 18th, 2025. I'm Byron Lazine, and the hot sheet starts now. Good morning. Let me know in the live chat which market, wherever you may be, that you are tuning in from here today. Welcome back in some of the BAMX members who were just with me on a live role play over the last half hour. If you missed out on that and you're a BAMX member, pay attention to the calendar updates. I think I'm assuming Bobby will put that replay up there. Maybe Haley can answer in the chat what the plan is on the replay there. I believe those are going into, obviously, the classroom. Yeah, they are. Classroom with live role play. So I'm sure that will be on there. Marissa, thank you so much. That's great. Oh, Kim, thank you so much. In order to get access to those, make sure you join BAMX, school.com/BAMX, school.com/BAMX, where all of our live office hours, live role plays, just like that, are living, as well as access to all of the hot sheet show notes and slides each and every single show. All right, we've got a Zillow report, home builder data as well, all out here today. So another big day. It is Fed week. We're building up to Thursday's show, of course, where we get to break down all of what Jerome Powell says at the presser, the prepared statements, and more importantly, the questions. So that'll be Thursday morning, as the presser is Wednesday afternoon. We do that every single time Jerome Powell takes after his meetings and takes the stage with the questions from the audience. All right. Zillow's housing report here for February 2025 is out. And they're making the stance that slow competition amongst buyers is flattening out home value appreciation. So, this isn't Darth Vader on X calling for a housing collapse. You're seeing a ton of that on X. This isn't that. This isn't saying that the housing prices are about to plummet to levels we haven't seen since 2008. No, this is just saying what it is. It's that the rapid rate of home price appreciation is being suppressed. It's flattening out. It's not going to be as robust. Okay. That might be actually welcome news to a homeowner who's not selling. If I'm a seller, I like record prices in 2025. If I'm a home owner, I'm like, and I'm not leaving for 10 years. The average homeowner tenure is 11.8 years. Am I really in love with, record high prices, which can push up my taxes depending on where I live? And it can also push up my insurance. It's more expensive to insure a more expensive home. So, if I'm not a seller, I don't really want this rapid increase in prices unless I'm going to refinance, or of course, obviously, if I'm going to be a seller, then I want that. I want that in in the year that I am selling. All right, home value index here for February 2025, according to Zillow's economic research, and you see the flattening out here, 357. According to Zillow, month over month, that number is actually down 0.17% here, according to Zillow, 0.17% down month over month on home sales. So less competition is what Zillow's pointing towards, to really slow down buyers. Slowing competition means slower growth in home values. Typical home values, they're up 2.1% year over year, but again, down just a nudge here, month over month. That 2% year over year growth, 2.1% according to Zillow, it's the slowest growth that has been seen in 18 months. Okay. 18 months is about 12 months after the interest rates went up. So if you went year over year on that, because you might be thinking, how is it not, 5 years or whatever? No, 18 months ago is 12 months after interest rates had gone up for 12 months. And so when you look backwards on that date, year over year, you obviously have lower growth there. Newly pending listings fell by nearly 8% compared to the prior year, according to Zillow. Now, we looked at Altos yesterday on Monday, and it looks like according to them, we're 3% off on pending sales. So, I like to match up all, the portals with what Altos, and certainly when NAR comes out I like to match everybody up, kind of see where the outliers are. Pending listings falling by 8% compared to the prior year, still standing about 10% above pre-pandemic norms. This is pending listings according to Zillow. So I like to see where they're at as well. Zillow, according to where they are on a national level, they say neither buyers nor sellers have clear advantage in negotiations nationally. Of course, if you're in the Northeast, the sellers, in pockets where there's extremely low inventory still, sellers are going to have the advantage. If you're in, Southwest Florida, where I'm sitting right now, you're going to have buyers with the leverage and obviously having the clear advantage. But overall, Zillow's market heat index is showing that neither buyers nor sellers have that clear advantage. Here's the Zillow market heat index. Okay, you can see here exactly what I pointed towards on where's the buyer markets. Well, it's Southeast, it's Florida. Okay, for the buyer market, if we're looking at a neutral market, these are the pockets where you're seeing a neutral market. And then a strong seller's market is going to be, exactly what I mean, Northeast. I mean, like Connecticut, New York, Massachusetts, parts of Mass. That's where you're going to see that strong seller's market. Strongest sellers markets, according to Zillow, would be Rochester, New York, San Jose, San Francisco, Hartford, Connecticut, Syracuse, Bridgeport, Boston, New York, Albany, New York, Albany, Buffalo, Washington, D.C., and Worcester, Mass. So just, it's Connecticut, it's New York, it's Massachusetts, it's Northeast, and a couple of California, locations there for a strong seller's market. You flip that over, where do we have a buyer's market? It's Cape Coral. It's Southwest Florida, Cape Coral. You've got McAllen, Texas. You've got Miami, Florida. You've got New Orleans, Louisiana. You got Scranton, Pennsylvania, as an outlier here from what else we're going to see on this list. Deltona, Florida, Jackson, Mississippi, Northport, Florida, Jacksonville, Florida, Little Rock, Arkansas. And then you've got Indianapolis, Indiana, and Palm Bay, Florida. But you've got a ton of Florida. You've got some Gulf Coast happening in there. And that's where the strength for buyers sits. It's in those regions. So, generally speaking, when they go on the whole here, Zillow's looking at this and saying nobody has the advantage when you kind of put everybody into the same mixing pot. But there's some extreme examples of sellers having advantage in the Northeast, and some extreme examples, obviously, in the Sunbelt states right now with buyers having that advantage. Jumping into BAMX, of course, you can get access to all of this going to school.com/BAMX. I'm going to just jump into the classroom tab, move over to the hot sheet here, and click on today here on the left, and break down some more of the reports coming from this Zillow chart. If we go for sale inventory right now, this number here is going to be much higher than what you've seen on, Altos, coming in over 1 million. This is going to probably include pendings like NAR, just over 1 million. This is above 2024, 23, 22, 21 levels. Really, the only year on this chart is 2020 that we haven't caught up to yet on for sale inventory, according to Zillow. New listings here in this year, February 2025. Actually, I'm not seeing that on there, so I'm gonna check before we. Oh, year over year. Here we go. New listings year over year, down 4.7%. according to Zillow on new listings. So new listings down. We did see a week over week increase according to Alto's research. Newly pending listings here, all showing down. So still showing the same trend year over year, down 7.9% according to Zillow. Zillow does deal with a lot of the data that they have on their portals, which is an abundance of it. Overall, what their headline is here again is talking about the fact that there's less buyer competition. So even in the areas where you're seeing inventory rise, even in those strong buyer markets, they have even more strength because there's less buyer competition. And I mentioned this yesterday. What I think is a really important question to ask for somebody who's thinking about selling their home, it's like obvious. And yesterday's hot sheet broke it down. It is obvious to me that going into the, this season right now, the next 30 to 60 days, this is the opportunity that I want to be a seller in right now. Because the question that's looming is, as inventory continues to rise through the second half of the spring, what is the last 6 months of the year going to look like? Is it really going to flip in more markets to buyers having the strength? Well, if interest rates don't considerably come down and you dump even more inventory, what's going to happen when we're at our highest level of inventory that we've been at in the last 5 years to prices? What type of pressure that Zillow is signaling is happening right now will ultimately be in the last 6 months on home price appreciation. If those rates don't meaningfully come down, if they come down to 6, I think we could have some more movement. Could also bring even more inventory out as would-be home sellers enter the market, because now finally they're willing to buy at 6 where they might not have been willing at 7. So the second half of the year, to me, when we're really tested with our most inventory at any point in the last 5 years, that's going to be really interesting to see where it goes. All right. Moving over to National Association of Home Builders. This is a key piece of data as the FOMC, Jerome Powell, and the Fed committee is getting set to meet today. This is the last piece of data that gives some insights on the economy, this builder confidence, and then, of course, the housing starts, permits, and completions that just came out today that we're going to get into here shortly. So just taking a look here at some of the key findings for the HMI housing market index for home builders, okay, and where their builder confidence is in the market right now. Builder confidence in the market for newly built single-family homes was at 39 in March. That's down now again 3 points from February. It's the lowest level seen in 7 months. Okay, so builders are worried right now. Builders have high levels of inventory. They're over 9 months of inventory right now. 9 months of inventory is well above the national average on existing home sales, which still is bouncing between 3 and 4. Current sales conditions also fell in March, 3 points to 43. Sales expectations in the next 6 months. So the next 6 months, the rest of the spring market, they expect a certain level of sales. They're holding steady at a 47. Anything under a 50 is not good. But here, this is what speaks to Zillow's report here. This number here, and this dropped again 5 points when we're probably in the thick of things for spring markets, for where the majority of new construction is. Like the majority of new construction is Florida, it's Texas, it's Arizona. That spring market in those 3 locations it's up and running. Like you can't convince me that the spring market's not in full swing in national home builder markets. National home builders don't build in the Northeast. It still might be cold in somewhere like Minnesota, but Pulte's not putting a flag down in Minnesota in a meaningful way. They're not doing it in the Northeast. They're doing it in the Sunbelt states. The spring is in full effect. It is happening. and the traffic of prospective buyers to those states where we've seen the high levels of inbound in US migration, those states are seeing prospective buyers, the traffic, which they're taking in data on this every single day with their sales offices. The traffic dropped 5 points in just a month to 24. So that tells me the pressure that Zillow's talking about, the pressure of the the lack of buyer competition, it's weighing on home price appreciation. It's weighing on Zillow. On home builders until we see really these rates come down to 6 and probably below that. That pressure is still persistent. We've been sitting at 6 3/4. We've seen a little bit of positive read on mortgage applications, but we've been there now for 3 weeks. It hasn't been off the chart. So there's still a lot of pressure on home buyers. Okay. The latest HMI also revealed that 29% of builders cut home prices in March, and that's up from 26% in February. Okay. They're moving up on price cuts in March, at a time when you would expect they could hold the most firm on prices in the spring market. The average price reduction was 5% in March. It's the same rate as the previous month. That's a typical number across the board. The use of sales incentives was 59% in March. So 6 out of 10 homes, new construction, have a sales incentive. Okay. Now 3 out of 10 are reducing price on top of maybe a sales incentive. Okay. So almost every house on there, 30% price reduction, 60% sales incentive, almost every new construction, there's room to negotiate. Okay. Home builders are certainly willing to consider offers that include compensation right now. They're looking to move inventory. They need to get homes sold. Okay. So there you go. Builders right now, feelings are down. Confidence is down. There's economic certainty. Here's from the NAHB. The builder confidence is falling on cost uncertainty, economic uncertainty, the threat of tariffs, elevated construction costs continues to push this sentiment down. Builders are expressing hope that a better regulatory environment will lead to improving a business climate. But regulatory environment to me is a long-term thing, right? There's going to be even number 47 said there might have to be a transition period. Don't focus on the stock market, right? These are things that the administration is saying that the economy is going to have to move through to potentially get to a place where we fix some of the problems. So builders are hopeful on a better regulatory environment, but that might come through a very stressful 2025 for builders. Okay. Their confidence in the market for new single built homes being 39 in March. It's the low level in 7 months. It's just not good. Here's the quote. Builders continue to face elevated building material costs that are exacerbated by tariff issues, as well as other supply side challenges that include labor and lot shortages. Okay, this is Buddy Hughes, NAHB chairman, a home builder and developer from North Carolina. At the same time, builders are starting to see relief on the regulatory front to bend the rising cost curve, as demonstrated by the Trump administration pause of the 2021 IEC building code requirement and move to implement the regulatory definition of waters of the United States under the Clean Water Act, consistent with a Supreme Court decision. Okay. So there you go. There has been some signals, and we covered one of them on some of these regulatory, cutting the red tape to allow, building in maybe areas that, shoreline building that previously took a lot longer. And so that might help some builders. But obviously there's a plenty of other issues that are really slowing them down. From an agent perspective, if you're looking at some of the communities in your neighborhood or your community that just aren't selling, some of the new construction, this is an opportunity to me to make an impact, to make content around that community. Maybe it's just for planting the seed for in a year, 2 years, when buyer demand picks back up for that community, that you now have some SEO juice embedded in YouTube or wherever the case may be, that you disseminate that content. But if you're ever going to have a builder relationship, if you're ever going to have builders and decision makers for builders in your Rolodex, if you're ever going to be able to have any leverage or any chance of relationship building with builders, now's the time. Now's the time when they need you the most. Think about it. 3-4 years ago, could you have gotten 3 years ago, let's say, could you have gotten a builder to pick up your call? Could you have gotten a builder to negotiate with you? Now think about if you had helped them out and done them some favors, or just created a relationship with them 10 years prior to that, when the last time they needed you was. Then even in those markets that are moving fast, would they at least say, I know that name, I want to work with that person, let's figure out a deal with that person. It's relationship building time with builders. If you're going to be in this business over the next 5 years, now's a time to attack those relationships. I think that's a really smart plan, because this is how they're feeling right now. And if you ignore them now, they're going to ignore you when they don't need you. But this is how they feel right now. This is a low level since, the last 7 months. And generally speaking, it's one of 3 lowest levels since 2023. If we just look at the last 5 years, it's one of the lowest 3 levels, outside of the dip there on COVID, but they're just not feeling good. Builders do not feel good now, which means now's the time to create those relationships and see what you can do to help them. Okay. Now, I know the common objections I get from agents on this. They have an inside sales office. Listen, I've been in a lot of those inside sales offices in this market that I'm sitting in. They've got a body sitting there. Yeah. They're looking for problem solvers. They're business people. Bring them the ability to problem solve. Having more people's numbers that you can reach out and help out and have a conversation with and put a deal together in your Rolodex that actually know what your name is a good thing, not a bad thing. All right, let's take a look at just released this morning, 8:30 a.m. Tuesday. Monthly new residential construction numbers, of course. Go through this from the U.S. Census Bureau and U.S. Department of Housing and the Urban Development all jointly announced the following new construction statistics for February 2025. I'll give you the headline, then we'll break down what that means month over month and year over year. Building permits coming in at 1.456 million. Housing starts coming in at 1.5 million. Housing completions today coming in at 1.592 million. This is how it looks like on the quick chart. New residential construction, you can see completions moving down, starts moving up, and permits just moving down, if you can see that. All right, so permits, how much did they move down? It's 1.2% below the revised January rate of 1.473 million, and it's 6.8% below February's 2024. So year over year, 6.8% down, 1.2% down month over month. Housing starts, the seasonally adjusted rate of 1.5 is 11% above January. So more starts happening now, second month of the year, at a tune of 11.2% versus the start of the year. It's 2.9% below February's rate of 1.5, February 2024. So down 3% on starts year over year, up 11% since the start of the year. Housing completions is 4% below January's number, and completions is also 6.2% down year over year. So housing starts, they've already pulled the permit. They've already done the excavate. Like they got to go, right? 11.2% up month over month. Not all that surprising, but the fact that permits are down is telling about how they're feeling right now in real time. Obviously, we just went through the confidence index, but permits to me is one of those indicators of, are they actually going to be putting any more money into the level of inventory that they already have stacked up. If we look at total starts here, which would include multifamily, you're up over 1.5. If you just extract single family starts, that's now the majority of it. So multifamily starts really has slowed down here. 1.1 million seasonally annual adjusted on single family starts. So single family making up the majority of that number. All right, let's take a look at where we are on the 10-year. As this new housing data was just released this morning, not much of a change here on the 10-year from where we've been. This 4.3 level that we've been at here for the better part of a few weeks now. We've dipped below it a little bit down to 4.2, but generally we've been staying right at 4.3. This has led to about 6 3/4 on the 30-year fixed. Of course, we've been trending higher the last few readings. 6.8 is where we came in yesterday, just a sliver down from where we ended the week last week. Remember, we ended the week on the weekly at 6.65. CME Group still has a 99% chance that tomorrow, when the Fed makes their decision, there will be no federal funds rate cut. We will break it all down on Thursday's hot sheet. Make sure that you hit subscribe and the notification bell here on YouTube. It's the best way to support everything that we do at BAM for absolutely free. And you'll get that full breakdown, of course, where we break down everything that Jerome Powell says about housing. We sift through the BS so that you don't have to, just like we sift through it inside of BAMX for our members. When you go to the classroom tab, you have all of the new content new this week, as well as all of the hot sheet show notes, all of the slides that we use in the hot sheet, as well as the show notes right down here at the bottom. This is how we make the cake. This is the format and the formula anybody starting a local show should use in your own market. That's all available inside of BAMX. Go to school.com/BAMX, SKOOL.com/BAMX. Can't wait to see you in the community. It's the best place to DM me. I will answer 100% of the DMs inside of school. So love to see you there. We've combined community, education, and training all in one place. It's the best education community on the internet. School, no more Facebook spam. Go to school.com/BAMX. Hope everybody has a great day. I'll see you later here on the channel with a new Real Word pod. Until then, of course, toodaloo.